Hi everyone, I'm excited to share with you three things about Amazon stock that smart investors know. Starting with the first thing, the cloud segment is fueling the company. In the 3 months ended December 31st, Amazon Web Services segment generated $5.3 billion in operating income. Meanwhile, the North America segment, which includes its e-commerce sales in North America, generated an operating loss of 206 million. The international segment, which includes the e-commerce sales internationally, segment lost an operating uh, loss of $1.6 billion dollars. So if it wasn't for the cloud segment, the company would entirely be negative in profitability in its most recent quarter. This is likely to persist for several quarters more as consumers have shifted their spending habits. They're spending more money away from home on things like restaurants and bars and travel and concerts and theme parks. That's taken away spending from online, and Amazon is a prime beneficiary of when consumers spend online. The second thing that smart investors know about Amazon stock is that it hired too many people during the pandemic. The company spent aggressively to maintain an excellent service level during a surge in customers and orders. You see this chart here of Amazon total employees annual. Look at in 2019, it had a little over 600,000 employees. That has surged to over 2 million employees, so more than tripled the amount of employees in 3 years. Now, thankfully, that figure is coming down. Amazon has announced several rounds of layoffs to bring that employee count to better alignment with the company. Still, the company just spent way too much during the pandemic, and it was spending lavishly to attract employees. If you all can remember all of the commercials Amazon was rolling out to attract employees, it was giving them a $1,000 bonus in some areas just to sign up, increased wages, paying for college tuition, and many other perks just to get people to come join Amazon, because when economies started reopening, Amazon found it extremely difficult to attract employees. There was a significant shortage of employees that really is still around even to this day. Companies that require people to show up in person, like Amazon, in their warehouses and logistics businesses, have a hard time attracting employees. So they had to really up the wages, up the bonuses to attract the employees. So this was bad news on two fronts for Amazon. Not only did it hire too many people, but it was also hiring too many people at a time when wages were the highest they've ever been, and adding bonuses on top of elevated wages. The third and last thing that I'm going to talk about in terms of smart investors, what they know about Amazon stock is that they over invested in capacity. So just like they over invested in hiring employees, they also over invested in their manufacturing, in their warehouse facilities, in their logistic networks. Think about their planes, their trucks and delivery vans and all of that. They just spent a lot of money. Look at the chart here. Amazon's capital expenditures over the trailing 12 months. Like at 2019, they were spending just under $20 billion, let's say $16 billion in capital expenditures. In the trailing 12 months that ended 2021, they spent $40 billion. In the trailing 12 months that ended 2022, they spent over $60 billion. And again, in the trailing 12 months that ended the beginning or ending of 2022, they spent another over $60 billion. So they've spent over $120 billion just in the last 2 years, and $40 billion the year before that. So they're approaching a $200 billion capital investment surge, an absolute surge as a result of the pandemic, right? And these decisions were made during the earlier stages of the pandemic. Now they've begun to pull them back. You could see a dip here, and they've begun to pull it back as they observed consumer behavior changed. But a lot of this was decisions they made earlier in the pandemic, and so they can't reverse. It was too late to reverse that in the middle of last year when they observed a rapid shift in consumer behavior. So this is all money that they rolled out. It's going to take a while before they can grow into these investments, because it's going to take a while for Amazon to get back to the level of customer activity they were experiencing during the earlier stages of the pandemic, when people were avoiding shopping in person and many in-person stores were closed temporarily. So I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So there you have it. Those are the 3 things that smart investors know about Amazon stock. To recap, the first was that the web services segment is carrying the company. That's where all the profits are coming from. The second was that they overinvested in employees. They nearly tripled, they more than tripled their employee count during the pandemic. And finally, they overinvested in capacity, warehouses, logistics, all of that, spending nearly $200 billion over the last several years in that regard. Okay, so that's all I've got for this video. Thank you so much for watching. There's some videos popping up on your screen right now that I hand selected because I thought that you would like them because you like this video. So go ahead and click on one of those, and I'll see you over there.